Hello, everybody, and welcome to the Middle Class Investor. This is Seth, your host. We had a kind of an indecision week. And the reason I say that is because when you get a doji like this, that's what that signifies in the market is indecision. It just means there's some balance between selling and buying, which if this, is a counter trend rally and we're getting close to the end of C, you would expect some balance between bulls and bears as one starts to relent and the other one starts to take over. So anyway, we got not a whole lot. I mean, there was a whole lot that happened during the week, but at the end of the day, there was no real ground made one way or the other. So our stance so far has not changed. We're expecting very strong wave 3 that should last 4 months or so, 3 to 4 months, I would say, and should take us pretty close to this box down here, maybe around 1900, 1800, something like that. And then we'll have a wave 4 that'll be pretty swift and not nearly as long as this wave 2. And then we'll turn around and have a wave 5 down in here. So should get pretty exciting. It's a good time to start paring back your investments, I think. I mean, that's what I've done. At the end of the day, it's your money. You get to decide, but one of the things for sure is if it does come down here and you're all the way back down here, it just is a really not so great feeling to be all the way back at 2016. That's just kind of the way. I've experienced that myself. Where the market sold off way back here in in 2000. The top of 2000. I started looking at, wow, man, my investments are down to where they were in 98, 99, or I missed this one, so I didn't have to live through this one. But this one, I distinctly remember thinking, golly, I had less money actually because I was investing all along in here. So when it went back, I was actually had less than what I started with. So this is not a good feeling. Nobody wants to go through that. So anyway, that's why it's one of the reasons I started this little YouTube channel. And hopefully we'll continue to get some views. We don't have very many views really. There's a couple of you that are pretty loyal, but I suspect when this starts selling and really taking off to the downside, a lot more people will be coming in more regularly. All right, let's look at volatility. And as you'd expect, volatility was very doji-like as well. You can see right here, not a whole lot of ground gain in volatility. I guess you could say the volatility was up slightly because here was the close last time and here's the close this time. So we did have an increase on volatility and no gain or no downside move in the market. Which I said last time, something can be a clue. It can be a clue that there's some fear developing from underneath. Let's look at the 10-year. 10-year, as I said last week, I think there's some ways to go, and I think it ultimately will come down here before it rallies higher. Although you can see we had a pretty strong, after this pullback, this is a pretty strong move. So, but I still think it might go up a little bit more and then turn around and kind of work its way down here, especially if the market sells off. I think that's what you'll see. You'll see a flood into bonds, and of course, interest rates will fall. I said that wrong. I said that exactly backwards. So. Maybe it is done. Maybe this is as far as this is going to pull back. We'll see. Because if the market sells off and there's a flood into there's a race to bonds, then interest rates are going to increase, not decrease. Um, I still said that wrong. So if there's a flood into bonds, interest rates will decrease, not increase. Sorry, buddy. Just a little bit punchy right now. A little tired, I guess. Got up early, watched the British Open, which is really good, by the way. If you're a golf fan, I'm sure you're getting a lot out of it. It's really interesting to watch these guys. If you play golf, you'll have a healthy respect for what those guys do. It's pretty amazing. Anyway, here's Germany. Germany's kind of coming off. You had this consolidation. It came right down to that area where it consolidated and is bouncing off. Japan. Japan looks, all these markets look weaker than the U.S. market. This looks like the U.S. market, but lower, right? We're like right here, right? If you look at where the U.S. market is with respect to these, we're more like up here making dojis. Okay, so we haven't gone through this. So this could be telling us something about the future. Let's go back to Germany. Whoops. Let's go back to Germany. So again, we're like, our market is like right, here. So, these markets have been selling off more. We never did look at the 13-week treasury. Let's look at the short-term treasury yield. And you can see, I had drawn this line, I think, last week, and you can see we're staying above it. It doesn't mean we couldn't breach it, but I just wanted to draw a new line to see, basically to show that like another trend is setting up. This was a pretty aggressive move, and maybe the next leg up is not going to be as aggressive. Or maybe it'll steepen from here, but I just wanted to kind of put in a secondary trend just to kind of gauge the strength of this uptrend. Let's look at, let's go to the TOS charts and look at, let's look at gold. Gold may have had it's just amazing to me that gold is coming all the way down here. I would have thought it would have gone higher first, but it's breached this 1227 area that we were looking at. Now it did it in a way that looks kind of fearful, so maybe it's done. Maybe it's going to start rallying here, but I don't know. I think gold has kind of fooled everybody. Certainly fooled me. And but that's the nature of the market, right? Is to fool the most amount of people. Silver, silver's, I don't know, maybe this is an A and this whole thing's B, and then we're gonna have a C. I don't know, but again, it looks like it looks like it's wanting to make a new low, which means it would have to drop below this area right here. So basically just touch that area again. So it's got like a double bottom situation happening. I still think it's a good area to own silver and gold, even though, as you know, my longer term prospects for gold and silver are ultimately down here. For silver for about $7.50 or so, and for gold the longer term prospects are below $700. So even though my longer term forecast for gold and silver is much lower, I still think these are decent places to own gold and silver. And I've explained that before. We'll probably talk about it again, but for now, let's just leave it at that. Let's look at the Euro US dollar. Let's look at a daily just to have a little bit more granularity. It's really hard to tell what the the Euro US dollar is doing. I think we're in some sort of triangle. And if so, it should be turning just any time now. This triangle, started back here. Here's kind of an A, B, C, D, and this may be E. And if this is E, then we should start lower. We should make new lows below this 1.15 area. So keep an eye out for that in the euro, which means the dollar should make new highs. The British pound, US dollar, same kind of thing. It's pulling back, but maybe not much further. Who knows? To me, the euro US dollar is a little bit better. It's a little bit easier to see what's going on in there than in the British pound US dollar. Let's go. Let's look at oil. Where's my oil? Crude light. It looks like maybe that finally we're going to get some sort of trend change in oil. The sell-off looks very non-corrective. Looks very impulsive in nature. So, we'll probably go a little lower, maybe even down to this swing low down here, down around 62. Then we'll probably have a pretty strong rally, and then you'll really see oil get going to the downside. I think oil, as I mentioned before, I think it's going below these previous lows back here, below 25. And but then I think the very long-term prospects for oil are much, much higher than where they are today. Like oil, $400 or $500 a barrel type, crazy. So, maybe right now is not the best time to be in energy stocks, but there will be a really good time within the next couple of years. And I think we'll just have to, I think the prudent thing is to sit on your hands and wait till the time is right, unless you're trading these stocks. So, I wanted to point out, I think on the ES, on the daily, there's a DP, which is a decision point sell signal, and it's against a blue STF, but it is kind of a like a holy grail type trade, although he doesn't have holy grail trades for DPs. But this could again be substantially lower, maybe into the 1800s or so. So I think this is at a, sorry I had to yawn. I think this is at a great place to, take a little risk off the table and start evaluating, whether or not you really want to be in this market. Now, the interesting thing is bullishness is just everywhere. I mean, the bullishness sentiment is very, very high. Very high. I mean, I can't remember when it was this high. When I was in 1999, I wasn't really studying the markets, but I'm sure it was really, really high then too, if not higher. But I just wasn't studying them in the same way that I do today, so I don't really have a reference point. But a lot of the Elliott Wave stuff that I read say that we're basically at those levels, and in some cases we've exceeded those levels, if you can believe that. So even though the market is not, it's higher, but it's in terms of real money, it's not as high as it was in 1999, and yet a lot of the indicators are even more bullish now. So I think that's a real good sign for sitting on your hands, stepping to the sidelines, and taking a break. All right, everybody, that is it for this week. I wanted to keep it short because basically what I'm going to put on the video is not much different than last week. That I think we've started wave 3, and it should get underway in earnest within the next week or two, I would say. So, all right, if you have any comments or you want to banter about around some topic, feel free to put some comments in the YouTube video section, and I will respond there. All right, everybody, thanks a lot for coming in, and we'll talk to you next week. Bye-bye.